Assalamualaikum and greetings to all of you. My name is Hazwani Mawaddah, Binti Abdul Kadir, and my matrix number is 71194. I am representing my group and will cover two subtopics in this learning unit, including the introduction. Here is an introduction to Islamic capital markets. As we know that Islamic finance has moved modernly through the period of transformation and innovation in the second decade. This occurred after the realization of reminder for us to develop the capital markets together with the secondary market that used for securities and investments, in accordance with the Islamic law, which is Sharia. The conscience of Muslim and the religion of Islam must be part of all transactions that take place in Islamic markets. Generally, according to root control, all the Islamic capital markets are prohibiting of its interest, which is known as riba, trading and commercial, that is known as al-bay, avoiding the agreement that are contractual, which is gharar, and also gambling. The transaction also need to apply with the concept of al-bay that define the trading and commercial of the instruments. There are 11 subtopics that will be covered in this learning unit. First of all, the purpose of this video is to understand about the Islamic capital markets in more depth. The first subtopic will be covered in this video is Islamic finance. Islamic finance is in accordance with Sharia or Islamic law. It is refer on how company and individual generate their income. This also apply to the sort of investment that is permitted on the basis of this form of law. It is possible to see the Islamic finance as a specific type of investment in social responsibilities. Islamic finance are differing with conventional finance, as some of conventional finance principles are prohibited, such as riba, gharar, and etc. According to roots control, Islamic finance is defined in various aspects, and it is divided into three categories, such as banking, takaful, and capital markets. In Islamic banking, there are two basic concepts, which are the division of profit and expenses and the prohibition of the collection and payment of interest by lender and investors. Bank did not ask for the interest in accordance of Islamic law, as they make profit through sharing the profit gains by the borrower. As Islam teach Muslim not to gambling, banks that practice Islamic way will forbid the transaction that involve usury and speculation. This show that Islamic bank make their profit by participate in the investment of borrowing by way of equity systems. Islamic banking practices are based on the text of Al-Quran and As-Sunnah. Okay, the definition of Al-Quran here is refer to the text of Islam as central, and it is believed by Muslim as a guidance from Allah Subhanahu wa Ta'ala. Meanwhile, As-Sunnah is defined as the way of Prophet Muhammad, words, behavior, and teachings. All the transaction occurs in Islamic banks must be complied with the legal of Islam, which is Sharia. However, the regulation that regulates commercial transaction in Islamic banking is called Fiqh al-Muamalat. Okay, this screen show you three financial agreements in Islamic banking, which is Mudarabah, Musyarakah, and Ijarah. Mudarabah is agreement of bank to gain profit or loss by sharing with one party, which is bank, invest the capital, and another party, which is investor or borrower, will manage the investment based on pre-agreed ratio. Musyarakah. Second one is Musyarakah, which is defined as the federation of all parties combining their capital and sharing the result of profit or loss based on pro rata basis. The third part is Ijarah. Ijarah refers to leasing. The owner of the property will lease the property to another party in rental or purchasing payment. In general, their investment activities, Islamic banking institutions tend to reduce the risk. As a result, firms that may be associated with the economic bubbles are usually avoided. Okay, we will move on to the takaful. Takaful is Islamic insurance where members contribute money to cover the damage or harm in the community scheme. Takaful branded insurance is based on Islamic religious law or Sharia law, which describe how people are responsible for cooperating and protecting each other. The takaful policy includes provision for dental, life, and also general insurance. Some of this principle is prohibited in takaful insurance, such as gharar, maisir, and also riba. An organization that run takaful has to follow the principle of Islamic cooperative. In addition, only Islamic insurance and reinsurance company can obtain the reinsurance commission or the pay it out. These two separate funds, a participates and a policy holder fund and a shareholder fund also need to be managed by the company. In takaful, gharar is forbidden as it means that one party are able to acquire all the profits exist in the contract and disable the other party. Maisir. Maisir is principle that will exist if there is any gharar involved in the takaful. The holder of the takaful expecting high return in a small amount of his contribution. It also not giving a good effect to the insurance company to use Maisir, as if the return is higher than the amount of contribution, the company will lose and yet to come to the bankruptcy. The third one is riba. Riba, which is a principle that promising a payment that are guaranteed in a contract. Some of the financial instruments that are commonly used riba are bonds and stocks. The last part in Islamic finance is capital market. A capital market is a place where financial securities can engage and negotiate with buyers and sellers. Here are some financial securities such as shares, debentures, debt instruments, bonds, derivative instrument, which is futures, options, swaps, and also exchange traded funds. There are two investments that are traded in capital markets. The first one is long-term investment that have a hold period that are longer than 1 year. The second one is the trading of short-term investment or assets take place through the money markets. The second part that I will explain is global perspective. According to Kadir 2020, the total number of countries that present in Islamic capital markets is over 80 countries and concentrating in only a few markets. The global Islamic asset is today with $2.5 trillion, and the total asset that is comply with Sharia will be expected rise up to $3.5 trillion up to 2024. This data is stated by 2019 Stats of the Global Islamic Economy report by Arab News. However, it is depend on the economic well-being of these markets. The expected rate of Islamic finance grew at an exponential annual rate of 10% to 12%.
Assalamualaikum and hello. My name is Nurul Izzatey binti Abdullah with number matric 71206. Today I will discover about the topic capital market and Islamic capital market. Capital market can be defined as a market in which individuals and institutions trade financial securities. Organizations or institutions in the public and private sector also often sell securities on the capital market in order to raise funds. Thus, this type of capital market is composed of both the primary market and secondary market. Moreover, capital market is where trading in financial instruments is conducted to raise capital by dealing with shares, bonds, and other long-term investments. Capital market has two types, which is bonds market and stock market. In stock markets, there have two types, which is primary market and secondary market. In primary market, they are focusing for investors who purchase shares directly from the issuing company, while in the secondary market is where investors buy and sell securities they already own. It is what most people typically think of as the stock market. The stock also sold on the primary market when they are first issued. The meaning of stock exchange market is an essential structure of the financial market, unique to the market economy, which is concentrates the demand and offer of shares in the same geographical and economic space, publicly, voluntarily, and permanently traded based on the known laws. In the Islamic capital market, we can refer to the market where the activities are carried out in ways that do not conflict with the conscience of Muslims and the religion of Islam. Moreover, the Islamic capital market represents an assertion of religious law in the capital market transactions, where the market should be free from the involvement of prohibited activities by Islam, as well as free from the elements such as usury, riba, gambling, maisir, and ambiguity, gharar. Today, various capital market products are available for Muslims who only seek to invest and transact in the Islamic capital market. Firstly, Mudarabah Sukuk is an integral form of profit sharing in Islamic finance. It is based on agreement between the suppliers of resources and entrepreneurs. Secondly, Ijara Sukuk. This is a contract or lease deal that allows the right use of assets in exchange for the payment. Thirdly is a partnership sukuk, means there will be one partner called as the Mudorib who will manage the project. Fourth, ordinary stock, also known as a common shares. Moreover, in fifth, preferred stock means everything other than the aforementioned shares of a company stock are by definition preferred stock and shares. 2006, mutual funds can be defined as investment vehicle consisting of funds collected by many investors for investment in securities. Lastly, single stock futures means contract between two investors where a buyer agrees to pay a specified price of shares.
Hello, my name is Nurul Izzatey. I want to share you about history and function of Islamic capital market. History of Islamic capital market. Firstly, Islam finance started in 1961 in Egypt by established in yearly Islam Bank. Secondly, structural development of Islamic finance in financial market start in the decade 1970 and 1980 by establish many of Islamic bank, takaful and investment company. Boost in Islamic capital market come after financial liberalization. Islamic capital market start in 1980 in Malaysia, while in the Bahrain, Pakistan and some other countries in early 1990. Function on Islamic capital market supposed to perform all the useful function of conventional capital market with the justice and equitable distribution of benefit.
Assalamualaikum warahmatullahi wabarakatuh. My name is Fuad Haikal with Aziz and my matrix number is 69761. I will explain the components of Islamic capital market. There are 5 components of Islamic capital market. The components of Islamic capital market are sukuk market, equity market, derivative market, commodity market, and forex and money market. The first component of Islamic capital market is sukuk market. Sukuk market is a financial product and structure that comply with Sharia. The intention of sukuk market is to create a return that's similar to the conventional fixed income instrument like bond. Sukuk market also can be called as Islamic bonds. There are 2 types of sukuk market. The first one is trust certificate. Trust certificate is a typical certificate transaction. The entity trying to raise funds that will establish an often offshore special purpose vehicle in a suitable jurisdiction. The second type of sukuk market is alternative civil law structure. Alternative civil law structure is a structure of sukuk transaction to be carried out with local law. The advantages of sukuk market is there is a potential marketing benefit for issuer active in Islamic market. The corporates should seeking investment in those markets. Next, the second advantage is there is potential for crossover into other niche financial market. There are also disadvantages of this sukuk market. Unlike the conventional bond market, the standardization of document for sukuk issuance has been slow to develop, and this can have adverse cost implications. Next, the tax treatment of sukuk market may be dissimilar to conventional bond in certain jurisdictions. The next component of Islamic capital market is equity market. Equity markets are crucial to any economy because they provide capital to companies. The Islamic equity market is where Sharia compliant stocks are traded. There are 4 advantages of equity market, which are the first one is investor in Islamic equity funds expect a high level of transparency. After all, if one of a fund's key objective is comply with Sharia, the fund manager must be quite open about which companies and firms they can invest. Next, Islamic funds may be considered more conservative and slightly less risky than some conventional equity funds. This is because Islamic equity funds avoid investing in firms that carry high level of debt. Next, the equity market is investing in any fund that purchases assets from multiple companies. It reduces the risk of losing capital when disaster strikes and a company declares bankruptcy or closes its doors. The last advantages is Islamic investment, including Islamic funds, tend to be less liquid than their conventional counterparts. Derivative market also a component of Islamic capital market. Derivatives are complex and risky contracts based on the anticipated performance of the relevant underlying asset. Conventional option and future stamp are collectively known as derivative. Option contract grants the right but does not oblige the holder to enter into an underlying contract of action on or before specific future date. The contract is not compliant with the Sharia. There are two situations that might happen. The first one is if the price changes favorably, the holder may exercise the option and the transaction of the asset is done at the promised price. But if the price moves unfavorably, the buyer of the option will lose if the transaction of the asset is done at an agreed price. Next is commodity market. What is commodity market? Unlike Islamic equity funds, Islamic commodity funds invest only in commodities. Also, any profit generated through the sale of the commodity is distributed among the investor in proportion of their investment. There are three guidelines of Islamic commodity market. First, do not short sell. Second, do not undertake a forward sales contract, and the last is do not deal in commodity such as pork or alcohol product. The last component of Islamic capital market is forex and money market. A foreign exchange market can function in the Islamic financial market by paying attention to the limitations set by Sharia. A foreign currency forward cover facility is also available in the present Islamic financial structure. There are three conditions of permitted forward cover. The first condition is foreign currency is required for genuine trade or payment activity. This needs be documented to prevent the use of the forward cover for speculation. Next, the forward cover should be formal promise to sell or purchase, not a sell or purchase agreement. And the last condition is the price of foreign currency can be fixed in terms of local currency. The forward cover fee cannot be obtained. That's all from me.
Development of Islamic capital market. Islamic capital market could be component of the capital market in Malaysia. It plays a crucial role in generating the country's economic process. Islamic capital market is a market parallel to the standard capital market and plays a complementary role to the Islamic industry in expanding and deepening the Islamic financial market in Malaysia. As the market becomes more complete and complicated, it needs supporting infrastructure so the system can operate and perform more. The mission of ICM is to hold out research and development activity, including formulating and facilitating long-term plans to future long-term ICM in Malaysia. The CAC was estimated in May 1996 to advise the Commission on Sharia matters regarding ICM. CAC members are qualified individuals who are ready to convey Sharia opinions and have extensive experience within the application of Sharia, especially within the field of Islamic economy and finance. A spread of capital market products are available for Muslims who are just trying to take a position and transact in ICM. The product include an inventory of Sharia compliant securities, sukuk, Islamic unit trust, Sharia indicates, warrants, call warrants, and crude vegetable oil future contract.
Next, I will present about standardizing and regulatory authorities. First is International Islamic Financial Market (IIFM). It focuses on product innovations and knowledge flow in line with strong, open and well-regulated standards and guidelines, catalyzing both national and international trading infrastructure,
and also to promote mainstream consumer adoption and incorporation. Secondly, the Islamic Financial Service Board, IFSB. Their focus is to implementing its mission through issuance and facilitations of worldwide prudential and surveillance standards and other initiatives which promote the sharings and cooperations of information. Okay, next is the International Islamic Rating Agency, IIRA. The Islamic financial services industry to gain recognition locally and internationally as strong and capable financial institutions adhering to greater standards of disclosure and transparency.
Hi, my name is Nur Afizatul Binti Abidin, and I will continue to key issues and how to address these issues in Islamic Capital Market (ICM). The first issue is investor education. ICM is well received in many countries, but it is mostly based in Muslim countries such as Malaysia, Indonesia, Middle East, and Southeast Asia. But from some research, the issuance of Islamic debt is climbed to 3-year high in 2017 in non-Muslim country. This shows that the acceptance of Islamic capital market is high in other non-Muslim country. Therefore, to address these issues, collaboration can be done such as regional collaboration among Muslim countries, and much better by doing collaboration among non-Muslim countries and Muslim countries for this Islamic capital market. By doing this, it can help to spur the growth economic of ICM. The second issue is knowledge sharing. ICM is known as it has great advantages, but it also has less exposure. Therefore, to increase the exposure, seminar, event, talk, and other exposure can be done to introduce the world about ICM. Seminar or event can be done either online or offline, depending on the situation. It can also be done by creating a website that contains all information about Islamic capital market so that many investors can check on it much easier. The third issue is the regulatory framework governing ICM. As we all know, ICM is based on Sharia principle. The issue arises as the regulatory framework of ICM clash with the regulatory framework of conventional market. Therefore, some part of the regulation such as inspection and supervision should be done to solve this problem. Other solution that can be done is also by harmonizing the Sharia interpretation so that many people can understand more on Islamic capital market so that this market can regulate appropriately. The next issue is the range of product in this market. There are range of product in Islamic capital markets such as Islamic funds, Islamic investments, sukuk, and others. Sukuk is the most well-known product in this market, and there are many types of sukuk. The less favorable sukuk is sukuk mudarabah, as investors find that it has less benefits on them. That is why structuring of new sukuks and venturing new types of sukuk should be done so that it can eliminate these disadvantages. According to INSEF KMC 2019, there are innovation on sukuk that has been done, which is to innovate the sukuk for better risk management and to overcome limitations. The last issue is Sharia compliance and governance. The issue arises as many investors doubt on the Sharia compliance, where they doesn't believe that thriving and profit alone is beneficial for them. They also talk about the lack of social touch in ICM. Therefore, the Maqasid Sharia amplifies the need for moral and legal in Islamic capital market. By providing this, it can provide balance for this issue.
Of Islamic capital market, the purpose of this work is to develop a comprehensive and systematic agreement and classification of issues within the field of different investment associated with health management. Advanced capital markets contribute toward growth as an example through more profitable investment. Moreover, it allows for more efficient flow of funds between operating entities. The market exists thanks to the savings which will be invested in it. The appearance of the many financial innovation will change the structure of monetary markets. In today's financial markets, there now not any difficulty in accessing different financial market segments in each country. Management techniques have reduced the extent of economic expenditure. Thus, they permit a wider group of consumers to take individual care. In recent years, interest in alternative investment within the stock market has increased. The enrichment of various groups in society has a control on the growing demand for innovation, which will offer more competitors to take a position fund for risk-taking entities. Alternative investment creates new challenges for market participants. On the one hand, they permit for diversification to investment portfolio and increase return on investment. The primary is to guide the financial asset of the customer, and therefore the second is to let relative value of the financial asset be maintained or encased through the implementation of economic operation. In wealth management service, the premise of cooperation is to satisfy the requirement of shoppers. However, this won't seem to be the quality needs of ordinary customers, but the particular need of individual customers. The requirement of made customers require an accurate determination of their willingness to require risk, taking under consideration the worth of their financial asset. More and more banks, due to its open product architecture, can invite customers to request advance to access to the wide selection product offered by foreign financial institutions. Additionally, the systematic increase within the will of citizens will force them to have knowledge of rational cash investment. At the identical time, empirical validation of emerging solutions and adoption in alternative investment field has to be done.